Welcome back, everyone, to Vox Markets. My name is Paul Hill, and I'm delighted to be able to speak to CEO Sukh Chamdal and interim CFO Martin Blair of CBOX.L, the UK's #1 specialty fresh cream cake provider. So welcome, guys.
Hello, good morning.
Yeah, well, a lot's been happening, Sukh, since we last spoke. Not least the inline first half results last month and reasonably positive outlook. Can you perhaps start there? Take us through what you're seeing at the coalface in terms of demand, because there seem to be quite a few sort of cross currents, particularly in the first half.
Oh, absolutely. So the last 12 weeks, we've returned to positive like-for-likes, and that's the result of people now consolidating or their spending, or people have now or taken into consideration all the cost pressures or utilities, inflation, and the cost of living. And when that happens, the hangover from COVID, the holidays are out the way, or the hot weather we've had was unseasonal. So we had 6 months of a perfect storm come in. And now people are back to all the kids went back to school in September, and people now know their budgets. So they're going to make their cuts or from here to there. But the one thing they're not going to cut in this gloomy atmosphere, they're always going to celebrate that one thing that comes in a year, which is a birthday. So a family of 4 is going to have on average just 1 a quarter. So you're not going to skimp on that particular spending. And that's what we found, that people are now going back to form, that they'll cut down on going to restaurants, they're going to cut down going on the takeaways, cut down on doing other stuff. But that one thing that's going to come around once a year is your birthday or your celebration or your anniversary, and you're going to make sure that you can celebrate that with a cake.
Yeah. And so what's your sort of like view for sort of Christmas? I don't know whether you've seen any sort of like England sort of like celebration cakes after Friday's or Sunday's result.
Oh, absolutely. We do get a little bit of a boost because people like to, celebrate. So we did see a little boost in sales when the people were celebrating with a bit of a sweet.
And you expect, so when it comes to sort of Christmas and the festive period, do you expect sort of like, get effectively normalized sort of demand then? Yeah.
Oh, absolutely. And if you saw in the news, Tesco's website collapsed because people are ordering food for Christmas. So they may cut down on the price of the presents they buy. They may cut down on the decoration they've got, but they're going to make sure that they celebrate with that sweet, and that's where we come in. So we expect our trading to be quite normal. And in the last few years, New Year's Eve has taken over as the peak from Christmas Day, and we expect that trend to continue.
Good, excellent. And then Martin, just on the numbers, the first half, and sort of like maybe sort of like trading in terms of in line with your sort of guidance. So can you just take us through the sort of key highlights from the first half results in terms of sort of margins and what you see going forward?
Yeah, absolutely, Paul. So we saw revenue increase, to 16.8 million from 16.5 million last year, and then gross profit also rose to 8 million from 7.6. And interestingly enough, that's a 47.7% margin compared to a 46.2 last year. So despite the cost pressures that are definitely around, we've been able to maintain margins. That's in part because we were able to pass on some of those price increases we had to franchisees, who in turn, we've actually had 3 relatively small retail price increases to help the franchisees maintain their margins. And so, we've enabled us to, whilst we absorbed some of the early fresh cream rises we saw at the middle part of this period, we've managed to increase our margin, and we think we'll be able to maintain that going forward.
Is there any, Martin, is there any dependency on energy costs here at all, on the cost of goods sold?
There is some, obviously, through our baking process, but we are trying to be as efficient as we can, and we're looking at new ways of actually making sure that we remain efficient on our energy usage. But yes, it has gone up, but it's a relatively small part of the components that go into our cost of goods.
What about the overhead side of it, of the business?
Yeah, as you would have seen at our year-end report, we actually increased our key top management into the company. So we have a new chief operating officer, we've got our marketing director, and we've enhanced our IT department. All of those costs have now fed through into the first half of this year. And so, yes, you do see an increase in our admin costs as a result of that. And also we, through our interim process, when Pardip left as CFO, we hired an interim CFO, which was not cheap. And right now I'm taking over that responsibility until we have a new CFO, Mike Botha, who's coming in early next year. And, you know, he's very experienced, both from Domino's and from the franchisee side of the business as well. So we're looking forward to bringing him on board.
And we see the cash position still is a very healthy sort of 4.2, isn't it?
Exactly, yeah. Again, slight increase year on year, 4.2 against 4.1 of the equivalent period last year. And that's despite paying the 2 million dividend that we declared in the period. And obviously, you know, we declared a slightly enhanced dividend this year. You know, 5% up on previous years, because we do feel the business is cash generative and strong.
Great. And then, so just in terms of the long-term sort of rollout, I know we had this sort of view of sort of 400 or 350 sort of stores, including kiosks and supermarket outlets and stuff like that going forward. Well, how's that sort of progressing? You mentioned you know, you sort of like contributed to Asda sort of like crashing its website, but how's that sort of like you know, sort of progressing that rollout? Because it seems as though you're doing some good, increasing the footprint in their big supermarkets.
That's right. We are continuing the rollout, and it's been a very positive experience with Asda, and they've highlighted another possible 62 sites that we can go into, and we're hoping to go into those in the next few years. We're also talking to another supermarket where we're going to start a trial in the next few months. And our shop opening program is going on according to plan as well. We still continue to open 24 stores a year. We've got 44 deposits from franchisees existing and new, and so those will translate into shops in the next couple of years. So overall, our rollout program is still looking very positive.
Excellent. And then Martin, just in the future investment plans, I know there's the marketing and the digital marketing is ramping up, but you're also sort of like putting some production lines in, I understand, and upscaling the delivery fleet to sort of refresh. Can you take us through what you see there?
Yeah, we made some significant investments in this first half of the year, particularly in the site here at Enfield, our production facilities. So, you know, we've really got a state-of-the-art production line now for cheesecakes, which is a very good line for us, as well as improved the general baking facilities and the hygiene within the area here. And as you noted, we did replace a large number of the refrigerated vans. Some of that was hangover from last year because we weren't actually able to order the vans because of the chip crisis that was in the motor industry at that time.
Yeah, so, silicon chips you're talking about.
Big silicon chips, yes. Yeah, okay. Nothing to do with our baking.
Okay.
And so, yeah, so our capital expenditure in this half of the year was much higher than we would normally see it going forward. So going forward, we'll be back down to more normal levels. So year on year, you'd expect to see it where it was previously.
Good. And on that sort of the new products, Sukh, I did promise my wife a lemon cheesecake. Have you got that flavour coming at all?
Well, what we're doing, we're rolling out seasonal flavours. So for Christmas, we've got strawberry and we've got blueberry, and that lemon cheesecake will come out in the summer along with mango as well. Okay. And we've also got back to introduce a range of brownies. So we're hoping to launch that in the next few months. And that will give you a luxurious brownies, which you can also purchase online, and we'll post it out to you. So our new website, which will be ready in the next early in the new year, or will allow any customer to order, and we can post it out to any customer anywhere in the country.
Great. Okay. Well, you'll get my order from my wife then in the next summer. That's for sure, because that's around her birthday as well. Now, just on the outlook for the rest of the year, then, Martin, in terms of the numbers, I guess we're tracking to sort of like I think what Liberum and Shaw Kappa are saying, are we?
Yes. Yeah. We're very much in line with that guidance.
Good. Excellent. And I'll just highlight to investors. I mean, Liberum have a price target of £2.50. I think the shares when I last saw were less than £1.20. So there's 100% upside there. And I must admit, I've just done a sense check on the sort of like, and I'm getting a £2. So there's plenty of sort of upside. So it's certainly something that investors might want to run the slide rule over. And in terms of news flow, Martin, going forward, what are we going to get a trading update in January after Christmas, or is it really just wait until the full year?
I think we're going to wait until the full year. I think we just want to approach it cautiously and make sure that, you know, we do see the numbers in line with that expectation, which we currently see. Yeah.
Well, I mean, I'm guessing then overall then, Sukh, I mean, we've had an improvement in your like-for-like results. I think September was up 3.6%, I think and I think the October was up over 4% as well. So there's good momentum then, I guess, heading for the rest of the second half.
Oh, absolutely. And I really genuinely think that, you know, the last 6 months, from April to August was a blip. And we're back to normal now. That or no matter what the economic situation is, we will always celebrate a birthday. No child can go without a birthday. And, you know, 365 days in the year, 60 or 65 million people in this country, that's 180,000 birthdays to be celebrated every day. And, you know, we're aiming to get a lot more of that market share.
Great. Well, we'll certainly look forward to all the new products and touching base again in the new year. So thanks very much, James.
Great. Thank you very much.